Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Dennis Dick, and we have from the floor of the New York Stock Exchange Tim Anderson. He's a managing director at TJM Investments. Tim, how you doing this morning?
I'm good, guys. How are you?
We're doing good. First of all, let's start out with some general market talk here. The S&P futures take the double top at 21.26 and a quarter. We have backed off here, so basically 30 points from the all-time high. Not a lot knocking us down here. Is this just a little pause here at the top of the trading range, and we're going to go back down to the bottom of it, or are you ready for that blast off to 21.50? Tim.
We might have some technical difficulties. Let me see if I can go get Tim again.
Okay. All right.
If you guys can believe this, where did this article go? Garrett just sent us an article to our news desk chat that said that it was coming from a firm called Expert Reviews in the UK. It said that new Windows 10 download could slow down the entire internet. I just clicked the article. I haven't read it.
So it's slowing us down?
Hey, Tim.
Hey,
sorry
Tim.
about
I'm
that.
not sure what happened.
Yeah, it's that Microsoft Windows 10. It's slowing us down here.
That's what we're blaming it on.
We're at a little new get up here. But we're going. Overall market thoughts. Top of the trading range, pulling back. What's your takes on the overall market, Tim?
Well, that's exactly what's going on. The market needs to rotate into some leadership if it's really going to make new highs. It's going to be very, very hard to do that with the oil sector constantly trading lower. And oil, again, is a little bit lower this morning. The world just seems to be awash in oil. Saudi Arabia has not really come off their commitment from last fall to defend their market share. And, although we have...
Seems like we're having problems with Tim's phone here. It's very bizarre.
Okay. We're going to try him back one more time here.
M&D Neil.
Tim Anderson, please.
1 second, please.
Thank you.
Bree on the quick save there. S&P futures trading down 50 cents here at 20.98. Crude crashing down into the 45 handle, down a $1.08. 46.04 here, have hit 45.96. Gold's in the red too by $4.40. We're trying to track down Tim Anderson here, managing director at TJM Investments. He was giving us some take on the overall market as well as talking about the oil market. We are trying to relocate Tim here, but in the meantime, go ahead, Dennis.
I've got some imbalances there in the meantime here, some interesting ones here too. AT&T 116,000 to sell, Pfizer 81,000 to sell, Coke 103,000 to sell, EMC 237,000 to sell. Those are all significant. General Electric 75,000 to sell. On the flip side, I'm looking for some buy imbalances. We got Nike with 17,000 to buy, which coincidentally did hit a new 52-week high on Friday. MasterCard 24,000 to buy here this morning, but predominantly sell imbalances here. I'm just looking, at least from the S&P 500.
Yeah, well, we had kind of a mixed day on Friday. We got all those pops off the open.
Good morning.
Hey, Tim, I'm sorry about that. We're having a little bit of problems here, but we're getting squared away. Let's move on from the overall market. What was your take on the Fed, and what's going to be the focus on the Fed moving forward?
Well, the focus is going to be really on any inflation data that comes out between now and September that will give them a little bit of support toward the initial rate hike, which they seem quite determined to want to do. You even had Bullard come out late last week at a speech and say, we're well on our way to a rate hike in September. he seems to be the appointed spokesman. Remember, he was the guy in October last year when it looked like we were coming apart at the seams and the S&P was down 10% intraday. And that said, look, if things get really, really, really bad, don't think we can't turn tail and do QE4. And that's one of the things that really helped spark that rebound rally we had in October of 14. So now he's the appointed guy again, and he's out saying, look, the data's going in our favor for an initial rate hike. We do have a jobs report coming out. There's no doubt that the economy is not smoking, but you had some personal spending and income numbers this morning. That seems to be the current Fed's favorite inflation data stream. And it's not showing huge numbers, but it's certainly, they were up 0.2% on spending, 0.4% on income. It's not zero. So the deflation is not the worry that it was 4 to 6 months ago. I'd be very surprised if they don't raise rates in September.
Wow.
Go ahead.
You think they're going to raise rates? The only thing I sometimes look at is I like to look at the TLT, I like to look at the utilities, I like to look at those dividend yielding plays and see how they're trading, because they can come sometimes, give you a feel for what they're thinking. And if you look at the utilities, actually, they've bounced back a lot. So if you think interest rates are going up, maybe this is the bounce to sell. Are you selling the bounce in utilities here then?
Well, I'd sell on the bounce in utilities really much more off the carbon emission plans that all over the papers this morning than I would off an interest rate rise. There's a couple of really, really smart guys that I talk to a lot in the utilities have really thought that the utilities would not bounce. And they've been down pretty hard since January. They would not bounce until an initial rate hike. And it would almost be a sell on the news reaction.
Right.
And I think they might be bouncing 6 weeks in advance of that. They put in that low at 550. I'm looking at the DJU. They're up a little bit from that. They're still down quite a bit on the year. Look, even if they raise rates, okay, rates are still going to be historically very, very, very low. And any big institutional investors that have actuarial requirements they have to meet, they're going to look at utilities and say, it's 4%. This 4% I can get here, and these stocks are 10% cheaper than they were 6 months ago.
Yeah. So there's still some value there, even if interest rates start to rise.
Yeah, sure there is.
Tim, I think over the weekend, I don't know if it was in Barron's or New York Times, was reading about the jobs data and the unemployment situation in our country, and what you're having is you're having a lot of layoffs in your higher paying jobs, like these guys that are working in the oil sector, whatnot, the drilling, these are dangerous jobs, and they're being replaced by like lower wage jobs. So I mean, if that's to me that kind of sounds,
that's part of the problem. That's part of the equation that's made wage gains and earning gains very hard to see in any of the economic data. Because exactly what you said, higher, you've had some cutbacks in the oil sector. Okay, oil's down 50% from its highs, and you're having some increases in the service sector, and those jobs are all very, very, lower wage jobs or salary plus tips. So, that's one of the reasons that you've had it's been hard to get any traction on income increases in the economic data. And I don't know. I don't really have like an answer for that or an idea of what might turn the tide there a little bit. But we just have to see how that plays out the next few months. But again, we have an interest. If we do have an interest rate, I don't think you need a lot from this point to get in a initial interest rate hike in September, and then they can wait and see how the market takes that, and where we are in December and then where we are in January.
Tim, let's move on to some individual stocks here and get your thoughts, because we're going to get some big reports coming out this week. I mean, we've been in the heart of earnings season, but there's still some big ones. We're going to get AIG tonight. We're going to get Disney tomorrow night. I'd like to get your thoughts on Disney. Stock did hit a new all-time high there on Friday, pulled back off those highs. It's trading up here again in the pre-market, up 58 cents. Stifel had a nice note there on the Star Wars movie saying it could generate as much as $2.2 billion in sales. What are your thoughts on Disney going into Tuesday night's report?
Look, it's been a stock that's been priced for perfection for at least a year and a half, but the reality is it continued to perform. It's one of the few big mega cap stocks that has continued to perform very strongly the last 2 years, quarter after quarter after quarter. And, a lot of that speaks to the portfolio. They've got a diversified portfolio, and they've obviously got great management at the top. And, I certainly wouldn't get in the way of it. The stock looks like an up stock.
What about Wednesday? We're going to get Tesla. What are your thoughts on TSLA?
Oh, God, I don't have a lot of thoughts there. The stock is what it is. It trades in its own little thing. The whole, Elon Musk aura maybe seems to have, a little bit of a wrinkle in it with this SpaceX missile that blew up a few weeks ago. The only cautionary thing about the stock is with oil trending lower, that means that gasoline prices is going to trend a lot lower, and if we get down toward below, consistently below 250, I just wonder to what degree that's going to affect Tesla sales, particularly when they.
I think we just lost Tim again.
Yeah, okay. We were coming up near the end of this segment. You want to try and get him back?
I'm going to blame Microsoft here, maybe. Yeah, right. Like, everybody seems to be having internet connections here this morning. Like Ahmad was saying, our charts are loading a little bit slower here. We've had problems with. I don't know what's going on here with the internet, but something's happening, man. Because it's problems in multiple spots. Is Tim there? Are you still there?
Yeah.
Tim, for some reason, I apologize. We keep losing, the audio there, or losing the call with you there. We were just saying.
Yeah, I don't know. We have VoIP phones too, and I'm not sure if it's at. I certainly usually don't get calls dropped over and over and over again like this. I usually do this call with you guys on my cell phone, which I don't have with me this morning.
Yeah, we've got some issues over the internet because I know our charts were loading a little bit slower, and we've had some issues with Skype here this morning. So maybe it's a Skype issue here this morning that's happening. So apologize there for Tim. Just final thoughts here now. So obviously the overall market, we've been in this trading range here. It seems like forever. We started with your thoughts there, and we actually cut you off before you got a chance to just say what your final thoughts here were on the overall market. What do you think? Are we eventually going to break out, or are we going to break down here from this trading range? Because it's been going on for about 9 months. We've been stuck, it feels like, between 2040, 2050, and at the upper end around 2130. What's it going to take to get us out of this trading range?
It's going to take real specific leadership from one of the big three horsemen in the market, and that would be either tech. You got to have 2 out of 3: tech, financials, and energy. And because of that, I just don't see it. Look, if we have a breakout, my fear is it's going to be a false breakout. It's going to suck a few people in, and then we're going to go down. I don't think that we're going to have a sharp sell-off, but I just think that we're going to trend lower. We're going to trend a little bit lower into the fall, and the key you got to watch, I think, is the Russell 2000.
Okay, we've been on the line with Tim Anderson. He's managing director at TJM Investments, calling live from the floor of the New York Stock Exchange, giving you a little bit of a cautious take on the market. Tim, thanks a lot for coming on. Sorry for the
Have a good week, guys.
Yep, we'll talk to you
Thanks,
again
Tim.
soon.